Good morning, trading world. It is January 25th, 2022, just after 8 a.m. in the morning, and this is my pre-market outlook and technical analysis for trading the SPY. Again, hello traders. Thanks for joining us here at JMJ Investments, where our goal is to provide an actionable game plan each trading day to help you reach consistent profits. So if that sounds like what you're looking for, go ahead and hit that like and subscribe button right now. All right, now that that's out of the way, let's get into today's outlook. The title for today: The Market and the Fed Play Chicken. Who will blink first? We came into Monday knowing we may have some more to give to the downside, which meant we would lean more on feel rather than market levels. We finally got just enough capitulation, but wait. The market is playing chicken with the Fed. Who will blink first during this week of worry? Normally I would say we can get a temporary bounce underway, but because we have Fed speak this week, and any number of market makers could be trying to prove a point by tanking the market to get the Fed's attention. We are hooked on the juice, or the market makers are hooked on the juice, and they don't want the Fed to cut the spigot off. So a lot of this could be proving a point to get the Fed to blink. So with that being said, us small guys, we don't want to stand in the middle of this war. We don't want to get caught up in the middle. So, if you're not already positioned to a certain degree, I recommend standing to the side while all of this takes place until we get the Fed meeting out of the way. But if you are a seasoned trader and you do understand divergence and you are quick on your trading platform, I'm going to give you the game plan in order to be profitable and possibly make big profits in the coming days. All right. One of the things that I'm looking at because of this Fed speak, I like to explain things using a lot of analogies. And if you've been listening for a while, you've heard me use the analogy as the market being a person running. And I always say how, there has to be a break or a water break when you run, longer distances. Say you're running a marathon, you place those water breaks at certain intervals. Well, right now we have the larger time frames doing the running. And often we see during these conditions, we have these wild ranges that happen. But usually we're so caught up in the intraday or whatever it is that you're trading that we forget to take a step back and look at the larger time frames. And when you look at the larger time frames, you realize it's just consolidation over a larger time frame, which means a moment like right now where we could definitely get movement of, let's say, 20 to 30, 10 plus points on the SPY, which is abnormal in a day. We could get that today and it still be considered consolidation because it's happening on a larger time frame. So I wanted to explain that and kind of explain why, or that if you're not already positioned during these type of conditions as we go through these ranges, it can be very dangerous to trade. And it's mainly because of how rapid we could go from one end of the range to the next. The expanded view out to the weekly, I don't think we have the temporary bottom in just yet. However, I think the Fed looms large over trading this week, kind of giving a pause or break from the algorithmic fall. Today, I'm going to say avoid the Jack and Queen support areas, if possible, because if you buy or sell in this range, it will be an invitation to get ripped apart in the back and forth. If you must take positions before the Fed, make sure it's a defined risk position, meaning it's a position where you know you can only lose a set amount. And then be okay with losing that set amount because the chances are greater for you to lose during these type of conditions. On a side note, before I get into levels for today, the Bitcoin trade that I spoke of yesterday is doing well. We want to continue to watch. Like I said, we're looking for the 39,000 area. Also, Apple seems to be trying. I did kind of speak to someone briefly yesterday, and they wanted some input on Apple. And I'll give you a little bit of intake on Apple because I haven't done a complete analysis on Apple, and I probably won't do so until we get closer to their earnings, because I may be looking at putting on an earnings trade in Apple, and it's a trade that would be considered a flyer. It's a low probability trade that could pay out big compared to the amount that you risk. So that I would be taking a more closer look as we get closer to the earnings for Apple. Because that trade would need the end of the week. I would need to be able to execute as close as I can to the expiration, because maximum profitability won't be able to be reached until expiration of that option period. But just a little peek at Apple right now, it seems to be trying to hold its 156 support. And let me bring up a chart of Apple. All right. It seems that Apple may try to hold support somewhere between this 156 and 154. We have MACD building, which is good for looking to hold the last support zone. Let's get out here to the daily, and that's at 156 zone, and we have the cross here on the stochastic. So things are somewhat looking good for a bullish day on Apple. And that bullish day, meaning it would only have to close above 161.62. But that's what I briefly looked at on Apple. Like I said, I'll take a closer look at Apple as we get closer to earnings. And I'll let you in on the trade that I'll be looking to do on Apple as we get close to earnings. All right, let's get back over to the key levels for today. Let me get those up. Okay, here we are with the key levels for today, starting with resistance. The Jack resistance level is going to be 434. And the Queen resistance area is going to be 437 through 439 area. The King resistance area is going to be 442 through 445 area. Going to the support side, Jack support is going to be 431 through 429 area. Queen support is going to be 425 through 420 area. And King support is going to be 416 through 410 area. Coming into the day, since we have vol or the VIX still over 30, we have to be prepared for just about anything, because at these levels on the VIX, anything can happen. So it's not ideal to want and have to take positions during these conditions. So you have to exercise a lot of caution, because things can go sideways very fast in these conditions. The other thing that I want to explain, a lot of times I do give probabilities on what the likely scenario would be. When you get a VIX over 30 again, all of that goes out of the window. And usually what I like to do, or what I try to do in these conditions, you can't come into the market with a preconceived notion of what's going to happen. You pretty much have to step in the ring and roll with the punches. Like I said, if you're not positioned a certain way, or just trying to manage risk, usually, like I say, it's not a good idea to want to try to take a lot of positions or moves in these market conditions. However, if you think you can roll with the punches, we're going to get into some scenarios for today. Like I've said earlier, in the pre-market here, with the Fed looming over this week, it's quite possible that we kind of consolidate right here in anticipation of what the Fed does. So I would normally say, in order for a bounce to gain traction, today's level is 434. If we get above 434, we could start to gain some traction to the upside. But again, it would not be right to call it a bounce right now, because the range is so large for consolidation right now. To me, we would still be in consolidation all the way up until really the 450 area. That is still considered consolidation to me. So let's look at some possible scenarios for today. And let me start with the first, which is going to be an expansive range day structure. All right, with scenario number one, the expansive range day structure, we could look to set a decision area or upward boundary around the jack or queen resistance area before chopping lower back towards lows around the 420 area, then trying to push the upper boundary again later on in the day. So as it reads, and also I want to prepare you, because these range days in itself has many different variations. It is impossible to plot all the different variations that a range day could have, much less an expansive range day. But this is just kind of a general guide of how things could possibly look. And the main thing to take away from a range day is that we at some point set a range high and then set a range low, and normally we would chop back and forth between whatever that high and low is. That's usually how a range day works. But when I put the term expansive onto range day, that throws a lot more variations onto what could happen, because instead of us setting a range high and then setting a range low and chopping in between, we set that high and set that low, and then we push that boundary, meaning that boundary is not stable, which means we can push through it. So it's very well possible that we could push through the low side. It doesn't mean that we have to start off heading toward resistance. We could start off heading toward support. There's so many variations that could happen in a range day. But just to kind of condition your eyes on possibilities, this is one of the bigger possibilities that I see. Going into resistance, coming back, testing some support level, and I call these decision levels for a reason. You hear me say support, resistance, and I interchange it with decision levels. And the main reason I do so is because that's exactly what it is. It is a decision level. It is a level in which we have to gather data and make a decision. So if we have divergence here, that speaks to a certain decision that can be made at this level. Because if we see divergence coming into this level where price action hits a low, but the indicator is not hitting that low, that's a divergence. That speaks to this could be a reversal here at that level. And on the other end of that, if we have convergence where price and indicator are moving in sync, it speaks to a reversal as well, but we could very well come back and revisit and push lower. So it's a lot of reading in between the lines here, especially in these conditions. So again, the first scenario is going to be an expansive range day type structure. Let's get into the next scenario. All right, here we have scenario 2, which could be a trend day down day type. And the keys on the down trend day, the previous close plays a very important role. The previous close was at 439.84, marked by the blue line here. And what usually happens is that we open gap down, and at some point during the first 15 to 30 minutes of the morning, we're going to get a half-hearted try to push back towards that previous close. And somewhere along the way, either at the previous close or somewhere before, we find resistance. We find that resistance and we roll over. And we begin the main trend of the morning, which is usually a strong, significant angle. We get into that downtrend, and it will usually persist all the way until we reach midday or the lunchtime time frame. And that gets us in what I like to call the lunchtime chop, or our midday chop area, which could happen anywhere around the queen or between the queen and the king support area. We usually keep up the midday chop all the way until after lunch or after 1 p.m. and that's Eastern Standard Time. And at that point, when we get ready to come out, we have a head fake like we're going to continue the downtrend that we had in the morning, but at some point we reverse and we kind of have I don't want to say rally, but we have like a slight uptrend going into the close. So that is a possible scenario for today. Again, with the volatility being what it is, these levels are really hard to see. Because on a day like today, we could possibly have a downtrend day. But what could happen is that we overshoot this area and we have lots of spikes above this area, making it look like we have gone or broken the resistance area here for this downtrend day. So you have to be very careful with that and watching how these spikes happen and whether we actually get a close above or how significant that close above the previous day is. So that's our downtrend day type. And let's look at the last scenario that I have listed for today. And the last scenario for today is going to be the rounded reversal day type structure, as I like to call it, the range day. And the range day and the range day have lots in common because there are many different variations that could take shape. Not as many as the range day, but there is a vice versa thing that could happen with the rounded reversal day. Key components to the rounded reversal day usually will have a open where we open, in this case, gap down, but there's usually always a gap on a rounded reversal day. And one of the key differences that I've noticed between the rounded reversal day and the trend day is that on the rounded reversal day, there will be no attempt at closing the gap. The momentum that we have before the opening bell seems to continue or strengthen at the bell. So coming into today, if we have momentum going down, we seem to build on that and continue down. And we'll do that pretty much all the way into our lunchtime or midday chop area. And that will usually take place at where we look at our queen and king support area if it's going to be a downward rounded reversal day. So we get price action coming off the bell down. We get to our midday chop area. And one of the things that we want to see is that there is a slight divergence with volume, with indicators, with internals from the moment we open up. If we get this downward trend day, you should see a slight divergence. If we're pointing down, I like to differentiate volume through bull volume and bearish volume. And As you can see, the green candles and the red candles, that differentiates bull and bear volume. So if we're coming down, you should see a divergence. And that divergence, if this is truly going to be a downward rounded reversal day, you should see a divergence in bear volume. So as we come down, bear volume should be dissipating. Your indicators and internals, you should see a divergence. As price action is coming down, you should see a slight uptrend on your indicators and internals. And that usually lets us know that we're going to get that rounded reversal the second half of the day. The other thing I want you to be prepared for is that on these rounded reversal days, things could happen a quite different way. With volatility being what it is, we could definitely see that burst through the closing and continue to build, and we could have this looked the complete opposite way. So I know it's a lot of scenarios to look to have to prepare for, but when we're dealing in this type of volatility, nothing's out of bounds right now. So again, if you don't have to, these are conditions where it is good to sit on the sidelines if you're not already positioned. So I can't stress enough, in these conditions, define and know your risk. And if you're going to step out and take positions in these conditions, be at peace with losing whatever that risk is, because you're at a greater probability of losing all of it in these conditions. So as always, wishing you a successful trading day. I hope this helps. Have a great day.